Good morning and welcome to the market forecast, fellow futures and Forex traders. My name is John Hoagland. Thanks for trusting me with your time. Today is Friday, February the 5th. Yes, finally Friday. And we're doing our best here in the Midwest to stay warm in the frozen tundra that the Midwest has become. Hopefully, things are going well for you and your trading and everything else. As always, we're going to look at these markets in context through the lens of risk management. Early this morning, 7:30, the unemployment situation numbers came out. The unemployment rate has fallen to 6.3% from 6.7%. As far as non-farm payrolls are concerned, that didn't go as well as they were expecting. They were expecting 50,000 increase. It was only 49,000, and even a little bit more. I don't know. Negative, I guess I would say, is the revision from last month's. They revised it from minus 140,000 to minus 227,000 non-farm payrolls lost last month, and a little bit lower than expected increase this month. Also, we had the trade balance come out, which was a little worse than expected, but the markets don't seem to be responding too badly to that. Because in the news here, the stimulus it looks like it's getting a fast track to turning into law. It's $1.9 trillion. What's a couple of trillion among friends, huh? Well, that is going to hopefully support a whole lot of people and through this epidemic, as well as supporting the markets. We've got the U.S. indices opening higher, some of them at all-time highs. So certainly the markets are enjoying the way things are, I guess. I mean, our earnings have been good. Markets are at all-time highs. Markets are not necessarily the economy, but it's a pretty good finger on the weight of how things are going in the economy. So we've got a shorter list of earnings as usual on Friday. Nothing too impactful due out this morning. And as far as crude prices are concerned, they continue to kind of ratchet higher on looming supply questions. OPEC agreeing to extending some cuts in production, as well as the Saudis agreeing to do the same. So we've got an interesting trading day. They're always interesting, always fascinating. Make sure that you trade what you see. What we think the market is going to do doesn't really help. It's what we see. Look for the probabilities. Look for those, I'm always saying this, those asymmetric opportunities, little risks for bigger rewards. Stay patient, stay grateful, stay humble in your trading. As always, make sure you like, share, comment, question, feedback, and heckling are always welcome. Make sure you subscribe to our YouTube channel so that you can get notified when we do go live. And as always, just a quick check on the VIX. It's about steady from where it closed yesterday at 21.76 last time I checked. And the dollar index down a little bit this morning at 91.30. That was pretty much after the non-farm payrolls numbers came out. They were a little bit higher, now a little bit lower. I'd like to say good morning to everybody. As always, Althea, first one in the room. You win the prize today. Good morning, Felix. I watched your interview yesterday. It was a very good interview. Very nice job. Proud of you. Oleg, Magnum, Bill, Simon, Tanya, good morning. Ralph, Clarence, Murph. Althea was asking, I've been in my step one practice account for a month because I can't get myself to trade live. Any suggestions? Yeah, take your time. Don't be in a hurry. This is a marathon. It is not a sprint. And I suggest highly watching and joining us for the market therapy next Wednesday at 3:15 Central Time. Dr. Menaker and I will be discussing that very subject. Why it's difficult. The more you add risk, how does that affect our psychology? And you may get some good answers in that, Althea. I'm looking forward to seeing you there. Bring your questions. That's what we're here for. The doctor is going to be here to answer your questions. It's amazing to me. A clinical psychologist who's an active trader going to spend some time with us next Wednesday. And once a month for the whole year, we're going to have that opportunity to spend some time with the good doctor. So, Althea, take your time. There's no rush. I know Murph is saying kind of the same thing. Don't do anything until you feel you're ready. And on the other note, he would just jump in. You have to do it sooner or later. Sometimes it's better to rip the Band-Aid off. It's gonna be a journey. It's gonna be tough. It's not easy to do this, but I believe that I believe pretty much everybody can do this if they do the right things. They do the homework. Continue to learn about markets. Continue to learn about ourselves, especially. So, Rob Torres Trader, check your email. I sent you an email, I think, yesterday. Brian, Esteban, Danielle, Main Point, Shane, good morning. Rod, Richie, James, good to see you this morning. Michael Kaczynski, good morning. Yes, it is a cold Chicago, and it's going to be cold, it looks like, for a couple of weeks here. We don't think we're going to get above 10. Troy, good morning. MSS Capital Rocker, good morning. JD, the Dancing Bear, is with me this morning. Always good to see you. Danny Ireland, is it possible to put up a spread chart on TS Trader like two corn or two wheat? I'm not sure about that. I don't think that is one of the things that you are available to put up as those spread charts on TS Trader. It's a good question. I'm going to look into it, and we'll see if we can't find a way to get that for you. Sharon, good morning. Murph, like the flannels for next time. Maybe for next winter we can have a few flannels like that one. Yeah, this is one of my faves. It's an old pal of mine. Keeps me nice and warm. Will, good morning. Milas, Andre, Mr. Shine, Dolby, good morning. Good morning. Dolby's with us this morning. Always good to see my fellow Top Step Trader people here. Jason, excellent, Althea. Very good. Glad to see that you're signed up. And if you did sign up a couple of days ago, I had to make an adjustment to the time on that, and it may have knocked some of you out of your registration for that. So just go ahead and re-register if you are really want to go. One more thing. Also next Wednesday, group coaching. We always have a good time there. And there is the link to register for group coaching. That's next Wednesday at 1 p.m. Central. I have very busy Wednesdays, and I love it. So, all right, I think we are done with our business here. Let's jump into the charts and see what we have going on. All right, so crude oil. I'm going to bring up the daily chart here, obviously. We have left our area of balance. If you remember, I had been talking about the fact that we had been piling in open interest while we were range bound, and that when we did break out, it was going to be a substantial move. Well, we broke out Tuesday, Wednesday, Thursday, Friday. We've been pretty much directional, time framing higher on the daily chart, and we are still bringing in open interest. We lost a little bit of volume on the upside yesterday, but we still added 17,000 in open interest. Money is still coming in to this market in an upward move. That's encouraging for continuation of the auction process. The past swing highs and targets that I see in the longer term charts, 59.77, which I really like because it's pretty close to that 60 big fat round number. And then above that, the next swing high I see is all the way up at 65.65. We're going to be paying more for gas, ladies and gentlemen. I think you can pretty much count on that. As far as today is concerned, the opening range just opened. Looks as though we've left the opening range at the low of the regular trading hour session. That opening range is the first minute of trade in any particular session. You have an opening range at 5 o'clock Central when the market opens, and then you have another opening range when the regular trading hours begin. In crude oil, that's 8 o'clock. We just opened. We are driving higher. We've got settlement down here at 56.23. We've got some pretty substantial overnight weak money longs. Being a Friday, if we don't see continuation of this move to the upside, if the overnight weak money longs are going to be getting out by the end of the day today, we could see a pretty substantial push back down to the downside. Again, we've got our opening range at the low of the session. We've got buyers coming into this market in the U.S. trading hours, which is exactly what our short time frame weak money traders from last night's longs are looking for. They're looking for new business to come to the upside, and I believe that there is plenty of it out there. Don't know if it's going to happen today, but I don't want to fight this move to the upside without some sort of structure to lean on, either in the day time frame or up against one of those longer time frame swing highs. And those are pretty far away. We're looking all the way up to $60 here before we can find a substantial swing high with which to lean on. All right, E-mini S&Ps. Shorts just continue to say, "Uncle." Every time I seem to think that the market's going to turn, and I start thinking about looking for opportunities to sell strength, I know I have to be extremely careful with that. I had an okay week this week in the S&Ps, even though I came into the week with that kind of a bias. But I know that bias is bad, so I just had to make sure and keep my hands to myself and wait for decent opportunities in areas of possible structure with which to look for shorts. It has not been very good this week. Yesterday was a really good upside move for us yesterday. It did catch a chunk of that. But we are right now at all-time highs in the S&Ps. We settled above our previous all-time high. Settlement is 38.6450. We have lots of overnight longs in this market. Are they overnight longs, or are they just still shorts getting squeezed out? It's difficult to know. We look at open interest for that, and we lost 7,200 in open interest yesterday. That to me says we had a whole bunch of traders probably a little bit short here, and they got squeezed out to the upside yesterday. So we also, I think, lost a little bit in volume, but again, that does not necessarily frighten me too much in the equities. We've got a pretty good divergence as far as, we're putting in higher highs on lower and lower volume. But again, that doesn't hurt. That doesn't help me. Doesn't what's the word I'm looking for? It doesn't surprise me, because the equities always seem to bring in more volume on the downside than on the upside. So here we are. We're going to be opening here in a little bit, and I promise I'm going to be done before this opens so that we all have the opportunity to take a look. Similar to kind of crude oil, we've got a gap to the upside. We've got overnight longs. If we cannot close this gap, if we see new business coming into the upside, don't fight that. Look for the opportunities to join that. If you're going to be looking for opportunities in the opposite direction, try and stay very patient today. We have come a long way, I think, a little bit here this week. Look at where we started, and we're all the way up here. There's the possibility that we may see some profit taking at some point today, but just be cautious, and you're going to have to time that very carefully. All right, so here's the NASDAQ. NASDAQ has been presenting as a stronger market. It never did break downside structure or attempt to break downside structure the way the S&Ps did. But again, we've got a pretty decent move to the upside here. Currently our all-time high is in the overnight. It's in the overnight in the S&Ps as well. And these markets don't like to leave the all-time high in the overnight session. We're going to probably put in a higher high at some point today in the NASDAQ and the S&Ps, because these markets just don't like to leave all-time highs in the overnight session. So taking a look here, we added some open interest yesterday, 3,400 on the move to the upside. So money coming into the long side here above that weekly kickoff at all-time highs. It's a better look for a continuation of the auction to the upside when you are bringing in volume. Some pretty both the volume and I think the open interest in the NASDAQ outperformed in the ES. Short eating machines. That's what these markets are, short eating machines. Watch the open. Opening range may provide a decent opportunity as we are out of balance and at all-time highs. We got the gap rules. In other words, if we can't close the gap, we're looking for opportunities for continuation to the upside. Again, I'm going to be watching that opening range trade pretty closely in here in the NASDAQ and in the E-mini S&Ps. Gold. So some pretty big volume was brought in on our breakout below this balance area that we have been in for a couple, 3 weeks. Our weekly kickoff low has finally broken. We're seeing the market continuing to the downside. Open interest added 1,300, not too impressive, but still impressive that we're bringing money into the downside here on higher volume. It's more likely that the auction to the downside is going to continue. So where are we going to go? Well, the only thing that I see, within reach for us today is this swing low here from January. This 1771 area down here looks like a pretty obvious visual target for price to take a look at and see if we can accept below it or reject and move back to the upside. So far, I mean, the overnight session, we really didn't do much. Right kind of where we ended the day yesterday, we had a pretty good push to the upside here after the non-farm payrolls number came out. It looks like we've pushed back from that. We got an inside day in extended trading hours. Where are we in the regular trading hours? Well, here's our 1809 previous weekly kickoff level that broke out to the downside yesterday after the open. We really just kind of dragged along the bottom. This is long liquidation, if I've ever seen it. Even though we added open interest, this B-shaped profile indicates a whole lot of longs that were kind of maybe holding positions higher, even higher than this, finally said, okay, that's it, we're out. Our 1809 has kind of provided a degree of resistance for us this morning. We are in range and in value. If we did not catch the opening range trade, which was initially the low of the session, not sure if it still is, but if we didn't catch it, I'm going to try and stay very, very patient today. I'm going to be looking for target-rich environments. Look at our overnight low. It's settlement, 1791.20. Our overnight high, back up here around our 1809 previous weekly kickoff level. Doesn't seem as though we're getting much success at returning and reaccepting inside this area of value yesterday. So again, stay patient. I'm going to be looking to work the extremes of the overnight against some of the information from the session yesterday. The high, the low, value high seems to be a little bit supportive here, and settlement also opportunities to look for. A cheap opportunity. It's what I'm always looking for. Some of the best trades I've ever taken have been taken simply because they were cheap. We've had our head and shoulders start to prove to be correct, I think, because of the neckline, the price range from the low of the neckline to the top of the head. I think there's a little bit more left in this downside. We're getting a push in the opposite direction right now, and that's okay. Volume has maintained on the downside yesterday, but we lost 2,300 in open interest. I don't think that people are convinced that this market is going to really kind of complete the head and shoulders move. So I'm going to be cautiously looking for opportunities to sell strength here. We did add volume on the downside yesterday, but again, lost open interest. Our overnight low, I think, is going to be somewhat pivotal for continuation, of course, below yesterday's range. 30-minute chart. Okay, this is a previous weekly kickoff level, and I'm going to gray it out a little bit because it's probably not going to be holding the same power, although yesterday it did kind of put in our regular trading hour session high. We left a gap. We are now closing that gap in regular trading hours. I'm going to be looking for opportunities to sell strength in this market if I can see overnight high, point of control, and value high from a couple of days ago. Those look like interesting areas for me to look for an opportunity. We got pretty close to it, and now we've started coming back off of it. So the other thing that interests me is the overnight low. If we can't hold the overnight low, then I see more selling coming into this market to complete that head and shoulders formation. Okay, the 10-year. The 10-year is kind of interesting today. We had an attempt to accept below that weekly kickoff low yesterday that was thwarted by the end of the day. Volume and open interest increase on lower prices here. We're seeing volume continuing to come in a little bit. Look at all the volume we've seen here today already. We're going to have higher volume today. If we accept below this weekly kickoff low, I see that there is certainly room to perhaps come down here and test this swing low in the coming days, which is 136.01 even. So just really focusing on the weekly kickoff level as a kind of a pivotal level. Now we've seen pivotal levels that get rejected very quickly. We've seen pivotal levels that become magnetic and get everybody chopped up. So try and stay patient here. We failed to close below that weekly kickoff low yesterday. We were testing below it earlier. It looks like another rejection of price down below that level, but how long are buyers going to remain strong enough to hold the market up above there? Here's our move after the non-farm payrolls number came out. A little bit whippy there. But again, not able to take out the overnight high. We put in a new overnight low, or a regular trading hour session low, I should say here. But that has also been rejected. So this area below weekly kickoff low, not really being too acceptive of volume, or time. If we continue to reject there's only one thing left for this market to do. It's either range or go higher. There's no gap. There's no reason to think that I'm going to miss the big move here today, because we're right in the middle of value. Again, the difference being, you're right at an important inflection level. So try and be cautious. We did add 15,000 in open interest on an overall move higher after a rejection of an important level yesterday. So it seems as though we did bring in some buyers here yesterday because of and I'm calling them buyers because we increased open interest in a move perhaps closer to the upside than the downside. All right. So, hey, I did it. Hopefully there was some good information and some good ideas for you moving forward with your trading today. Now, I've got a couple of questions here. JT Carpenter, how do I see open interest in TS Trader? Here, you know what? I've got a minute here. I'm gonna show you. Let's go back to the charts. Okay, now this is only going to show you the current front month. So I'm going to get a quote board here. Okay, and I'm going to drag this over here into the S&Ps. Now I'm going to put my symbol in ESH. Okay, now I've got a quote board, and I've just added the March ES, the March E-minis. The overall open interest is not on here, so what I'm going to need to do is I'm going to go to Settings, and I'm going to go to Select Columns. I'll find Open Interest. I'll grab it and drag it over here, and then save it. Now I've got open interest right here, 2,584,290 is the open interest from as of the close of yesterday. Then I can minimize it again, keep it somewhere on my chart, so when I want to take a look, I can take a look. Now, when you have a product that trades far out into the future or rolls over every month, like crude oil, you're going to want to look at something else. You're going to want to look at the total. Let's see if I can get this up here. You're going to want to look at the total of open interest, not just the front month. Take a look at this. Okay, this is the CME group. I'm going to put this link in the room here. This is the volume and open interest bulletins. They used to hand them out on the trading floor in paper. I have one that has the S&Ps trading down around 100. It's from 1983. So here's energy. I'm going to go to energy. Okay, it's going to bring up the preliminary number. The final numbers are not necessarily available until after about 9:30. But here's all the open interest. Look at how far crude oil trades out into the future. If I'm going to be only focusing on the front month and it rolls over every month, I'm going to think, as we get closer to rollover, that everybody is vacating the crude oil product, but it's not the case. I'm going to look at the total number down here, especially in markets like crude oil that trade very far out into the future, and they have all this open interest that's out there. So I want to watch the total open interest. All right. Okay. Let me get rid of this, and we'll get rid of this. Okay. So, Nick, I look at the regular trading hours in gold at 7:20 Central. 7:20 Central. Maybe that's where we're getting our things crossed here, or I may have had something wrong on the charts. It's entirely possible, but no, 7:20 is the regular trading hour open for gold, and also for the currencies, also for the treasuries, and I think that's it. Uh, how important is the bond pit time 7:20? Seems very active as an opening range area. Well, most of the major players, most of the bigger banks and funds and everything, they're still adhering to basically the previous pit day, the pit hours, the pit open hours and pit closing hours. That's a picture of the bond pit behind me of about, I don't know, 30 years ago. So if you look at, let's say the S&Ps or one of the treasuries or even, crude oil or gold, you look at the 30-minute chart, there's very low volume in the overnight. And when the regular trading hours would be opening in the pit, that's when the participants come back into the marketplace. Okay. And that's why I choose to trade pretty much the regular trading hours as a day trader, because all of the participants are available and able to affect the marketplace. So just a couple of thoughts on that. I've gotten a little bit long now. I was going to try and be done before the equities open, and I'm going to do it. Deep breath, humble, grateful, and creative. Get out there and profit. Have a great trading day. Have a great weekend. Do something nice for yourself. Do something nice for somebody else. Wash your hands. Be good to everybody. Blessings to everyone. Have a great trading day and a great weekend. I'll see you Monday morning, 8 o'clock Central for the market forecast.